just on my way back from lunch at the Shard in the City of London. I was out with some old trader friends, and a couple of guys came up to me, I think they were French, and they said to me, hey, sign autograph, sign autograph. I thought, well, that's a bit odd. But then I thought, well, I do have 120,000 YouTube followers now, so maybe this is going to happen. So I signed away. Then they said to me, hey, sing us a song, sing Studio. Then it dawned on me, these chaps thought I was Phil Collins. I don't mind, but Phil Collins is almost 70 years old. Wouldn't mind his money though. But it did get me thinking, why is it that so many people, they can sing a song, sing really well, play a tune on the keyboard, or wizards on the drums, but why is it so few make it to international stardom and fame? It's pretty much like trading. You can learn to trade pretty much everywhere. It's all out there. Everything that you need to know, all the educators and so-called gurus out there telling you which way to turn. It's become a bit of a minefield, if I must be honest. But I think one of the biggest reasons that causes many to fail is that they overcomplicate it. And they're putting together all these different indicators and different tools in order to find that holy grail of trading. Well, get this, folks, it doesn't exist. Often, the most successful trading strategy is indeed the simplest of them all. And today, I want to share with you a simple to follow, easy to understand trend following strategy that you can master with just 3 simple steps. This is so easy that even Phil Collins would be able to trade it. So just putting it into the house here now, so I'll jump onto the screens and show you exactly what it's all about. Now, one of the biggest problems or hurdles that many face when they come into trading for the first time is that they overcomplicate the whole process. And to be fair, it's not surprising. There is so much information out there, so many educators and gurus, pretty much all the failed traders out there telling you which way to go because they were unable to go that way themselves. So it's not surprising it's become a bit of a minefield. So I think that is the reason why so many end up giving up on the dream of becoming a consistently profitable trader. Now, for those of you that have been following me over the last few years or so, you'll often hear me talk about the 3 pillars that make up a successful trader. First of all, you've got the psychology. Well, that's basically the emotions, the discipline, that type of stuff. It's one of the difficult pillars to master out of the 3. Then you've got risk management. Risk management, well, once you know the rules and so forth, pretty much easy to grasp. Then, of course, you've got the strategy. Now, this is where many traders, when they come into the markets for the first time, they spend so much time, energy and money trying to find that perfect strategy. Well, get this, folks, it doesn't exist. And quite frankly, it doesn't have to. What you need to do is find a simple strategy that has a trading edge. And that's exactly what we're going to discuss today. Remember those videos I put out in the past? The cycle of doom, the law of large numbers. These are the best videos I think I've put on this channel over the years. Make sure you check them out if you haven't already done so. If you subscribe to the channel now, of course, you'll be able to watch all these videos in the one place. Oh, and if you do subscribe to the channel, make sure you hit that bell notification. Very, very important. The moment I release my next video, you're going to be notified if you click that bell notification. Very important, make sure you do that. Back to the 3 pillars and the strategy. Now, as I've said before, a strategy doesn't need to be complicated. In fact, it's far better if indeed it's not complicated. Think about it for a moment. You can toss a coin and be right 50% of the time. So today I want to showcase to you a very simple trend following strategy that forms the very basis of all my trend following trading. Now, it's very simple to understand, it's very easy to implement. It basically follows 3 simple steps. It's so simple that even Phil Collins would be able to use it if indeed he was inclined to. And I'm sure he spent less time in front of the trading screens than Oliver here. It's about time I got him back in front of the camera. So now let's jump on to the whiteboard and I'll show you the guts of this strategy. Then we'll jump briefly onto the screens and I'll show you some back-tested examples so you're left in no doubt how you can trade this strategy. Now also, make sure you stick around till the end of this video as I'm going to be giving you away a special treat that's going to make this strategy so much easier for you so you'll never miss a winning trade. Come on, let's have a look. Okay, so now I want to walk you through a very simple trend following strategy that follows 3 basic steps. Then once you've mastered these, you can go away and do some backtesting and then start trading this strategy. Now when I say backtesting, what I actually mean is backtesting. Don't just look at a chart with a few potential winners and a few potential losers and then evaluate. No, do some proper backtesting. I say it time and time again in my trainings. If you are serious about trading, you've got to put in some work. Now remember, this is just one pillar of what makes up a successful trader. But quite honestly, it is one of the easiest to master of the 3 pillars, certainly more than the psychology side. Now this strategy strips out all the indicators apart from 3 moving averages. It relies pretty much purely on price action. This type of trading that we're going to talk about today is often referred to as naked trading because, as I say, it strips it down to the bare bones. So the step 1 that we need to establish is determining the direction of the trend. And we do this by using an array of moving averages. Now I use the 8, the 13 and the 21. You can use the 10, 20, 40 or whatever you choose. But I use the 8, the 13 and the 21. I want to see the trend breaking out with a fanned out array of moving averages such like this. I'd like to see the trend to be at least 3 candles into the trend. So we know that it's not just a false little move up, that it's actually a trend developing. So we use the array of moving averages on the higher time frame and on the trading time frame as well. Then we look to establish the high probability entries. And what we do here, very simply, we look for a pullback into the array of moving averages. So a pullback into the EMA array. And we look for price action in terms of these candlestick patterns in these array of moving averages and then looking for a continuation of that trend. So remember, when the market pulls back into the array, we look for the pullback to stall and then move back down in the direction of the trend. And we use, as I say, these price actions. This is the bullish engulfer. This is the bearish engulfer. We look for these bullish pin bars or these bearish pin bars. Now, once we get onto the screens in a moment, this will become a lot clearer. Then, of course, we need to establish the risk management as well. How much you're going to risk on each trade, when you're going to exit the trade, when you're going to move to break even, and so forth. Again, once we get onto the charts, this will become a lot clearer. Okay, so now we're going to go through these 3 simple steps to this trend following strategy. After this, we'll jump onto a price chart and look for entries and exits, and then hopefully everything will become a lot clearer. You'll be well equipped to get working with this strategy. If you have any questions at all, please leave them in the comment section below. I read them each and every day and we'll get back to you without delay. Okay, let's get going. Okay, so step number 1, we need to establish the direction of the trend on the anchor chart. So for example, if you're trading on the daily, you'll be using the anchor chart of the weekly. If you're trading the 4 hour, you'll be looking at the daily. The 1 hour would be looking at the 4 hour, and the 15, 5 and 1 minute, I suggest you look at the 1 hour anchor chart. So the anchor chart basically is the higher time frame chart. You've got the 3 moving averages. You've got the 8, the 13 and the 21. They've got to be fanned out, nicely fanned out like this, all pointing in the same direction, not crisscrossing like they are here. And we need to see this trend in development by at least 3 candles. So 1, 2, 3. So now we've had 3 candles into this trend. The trend is established to the upside. So we are now looking only for buy trades in this uptrend. We now drill down to the trading chart to see the exact entries. Okay, so here we are on the entry chart. Now we are looking for buy trades only, as we saw that the trend was up there on the previous slide on the anchor chart. Now we're using the same array of moving averages, the 8, the 13 and the 21. You'll note that they are nicely fanned out here, all pointing up, none of this crisscrossing down here, which indicates that there's no trend in play. Now, as we know, no trend will continue in a particular direction, be it up or down, without minor pullbacks along the way. And we're looking for these minor pullbacks to stall and for the major trend to continue. And we use these basic candlestick patterns to indicate that the major trend is set to continue. We're looking at the bullish engulfing pattern and the bullish pin bar pattern. First up, we look for the bullish engulfer. Here you can see the uptrend has been established now for a while. The buyers are in control of this market. Now some sellers start coming into the market and they overpower the buyers, therefore pushing the price back down from where it came. Then we see this candle. Now this candle here, this bullish candle here, it's fully engulfed the previous bearish candle. This is a bullish engulfing pattern. So we've moved into the array of moving averages. We've resulted in a bullish engulfer and price has closed higher than the moving averages, indicating that this trend now wants to continue. The pullback is stalled and the major trend is set to continue. So we enter a buy trade here, a couple of pips above the engulfing candle with an initial stop, a couple of pips below the low of that engulfing candle. Now I'm going to talk more about the risk management parameters in the step 3 in a couple of minutes, so don't worry about that too much at the moment. And on we go to the upside, and you see the buyers are in control, pushing the market up. Then we get to this candle here. Now here you'll see this big wicked candle. This shows you now that the sellers came into the market and were quite prevalent. They pushed the market right back down into these array of moving averages. However, the buyers then regained control and pushed the price back up and closed above. This is a bullish pin bar, and this bullish pin bar indicates that the trend will continue in the direction. Sell trades are exactly the same, but of course in the opposite direction. The trend is down, meaning the sellers are in control of this price action. And then we see a pullback into this array of moving averages as temporary buyers overpower the sellers, and it puts in this bearish engulfing pattern. Prices move back into the array of moving averages, and this last candle here fully engulfs the previous candle, indicating that this trend wants to continue with the stronger trend, which of course is to the downside. Entries will be the same. You enter a couple of pips below the low of the candle with an initial stop, a couple of pips above the high of that candle, for the trend to continue down. Again, risk management all to come. Trend continues on to the downside. Then we have this another pullback. Here's where the buyers get back in control, push the price up, but then the market closes back down below these moving averages, indicating now that the trend will continue to the downside. This is a bearish pin bar in the direction of the trend. Now, if the bearish pin bar were to close up here, for example, it would be an invalid trade. It has to close below these moving averages, or certainly in between the 8 and the 13. So we would enter 2 pips below, stop 2 pips above, and look for the trend to continue back on down. Okay, so let me know if this is clear. Any questions, please do shout. Also remember that I do have a great tool to give away to you absolutely free that's going to find all these patterns for you, the bullish, bearish engulfers and bullish, bearish pin bars. So you're not going to have to spend all the time in front of the screens. It's going to scan all the markets for you and all the multiple different time frames looking for these setups. Got to do a little bit of extra work. So it's going to be super easy. Details will be at the end of this video, so make sure you stick around. Right, now let's look at risk control. Okay, so we're going to have a 2 exit strategy. That basically means we're going to have 2 profit targets. Now, the beauty of this exit strategy is that it will keep you in the trade for as long as the market wants to continue in that particular trend. So on occasions, you are going to get some really big home runs, some really big winners as the trend continues. Not all the time, but when it does happen, they can be quite huge. Now, as we discussed, for buy trades, we will enter the trade 2 pips above the entry candle, and the stop is, say, 2 pips below the same candle. So that's going to be about there, and your stop will be a couple of pips below about there. Now this distance here, this is your risk, and your first profit target is going to be the same distance as this risk. So for example, if this is 15 pips, your first profit target will also be 15 pips. So profit target 1, you take off 50% of the trade at the same distance as the risk. Now remember, the distance of the stop shouldn't affect the dollar risk because you're position sizing accordingly. So if the stop is bigger in terms of pips, you need to reduce the size of the trade. Now, if you need to understand position sizing in more detail, please refer to my previous video which I did a few months back. So once you take profit target 1, you've got 50% of the trade remaining. Now, the 50% of the trade remaining remains in the trade until price closes below the 13 moving average. So it actually has to close below, not just trade below, it has to close below. Remember, we've always got this protection in the stop because we are now at break even. So the price closing below the middle moving average, which is a 13 moving average. This will enable you to keep in the trade for as long as the trend wants to continue. And of course, the same rules apply for the bullish and bearish pin bars. There's the bullish pin bar, 2 pips above for entry, 2 pips below for stop. That's our risk. And our first profit target will be 50% of the trade at 1 times risk. And then we'll run the second part of the trade until price closes below this 13 moving average. And the same rules apply for sell trades, but obviously in reverse. Here you can see a bearish engulfer pulling back into the array of moving averages. We'd enter a short trade, a sell trade, 2 pips below there with a stop 2 pips above. That is our initial risk. Okay, and our first profit target will be 1 times risk, which would be down here somewhere. Okay, we move stops to break even on the second half of the trade, and we'll run the second half of the trade until price closes above the 13 moving average. Remember, it has to close above the moving average, not just trade above, because we've got that protective stop at break even should indeed it wish to carry on. Same again here on this bearish pin bar. Entry there, stop there. There's the risk. There's your profit target. Break even and keep the trade going until we close above this 13 EMA. So as you can see, a great way to ride the trend. Now let's jump on to a price action chart to see this applied to some real data. Okay, so here we are now on the euro dollar. We're looking at the 1 hour chart. We have already confirmed on the higher time frame, the 4 hour time frame, that the trend is down. So we're looking for sell trades only. Nicely fanned out moving averages. So everything is looking good. Looking for a pullback into the array of moving averages. Looking for engulfing or pin bars. Okay, there we see a pullback into the array of moving averages. We have a bearish engulfer here. So we look to enter a short trade 2 pips below. The stop will be 2 pips above. Our first profit target is going to be about the same distance. That's 1 times risk. And we'll move on down. And you see first profit target has been hit. So we move our stop to break even. And now wait for price action to close above the 13 moving average to exit the second part of the trade. And indeed it keeps on trading down. And not quite a close below there. So this one has been, this one would have kept us going for a long time. And there we have a close at the 13 moving average. So you can see a really big trend there that we were able to capture. And we'll scroll on, looking for short trades only. Moving averages are fanning down. Need confirmation, of course, on the higher time frame, but here's an entry. If they were, there's a pin bar into the array of moving averages. We take an entry there. Stops above. First profit target, 1 times risk. And scrolling on through, and first profit target is hit. Stops to break even. Waiting now for a pullback and a close above the 13 moving average. Just there. Okay, so that was again a nice trend we were able to capture. So now we're looking for buy trades. Moving averages are fanning out to the upside. Okay, there we have a bullish engulfer into the array of moving averages. So we enter a buy trade here. Our stop will be there. and first profit target about there, and we'll move on up. Okay, first profit target hit, stops to break even, now waiting for a close below the 13 moving average. Not quite touched it there, but didn't close below, and it closes below there, so we get stopped out at about there, which is a bit more than the first profit target. And scrolling on, still looking for buy trades, found out moving averages, a couple of small pins in there. There's a decent sized pin, broke through the moving averages, closes above, entry there, a couple of pips above, stop below, first profit target 1 times risk, profit target 1 hit, stops to break even, and we closed below there. So the second tranche of this trade, we got stopped at about the same level as our first profit target. Now, the beauty about this strategy is that it works on all time frames. Now, these pin bars and engulfers are appearing all the time. Sometimes it's difficult to monitor all the different currency pairs, different time periods. That's why we use this really clever tool that basically does all the hard work for you. Details at the end of the video to get your hands on this absolutely free. Now, I hope you found that useful. Very simple stuff, I'm sure you will agree. Now, this strategy works for me, but it doesn't mean it's going to necessarily work for you. I could give this to 10 different people, 5 will make money and 5 will lose money. Remember, those 3 pillars is not all about the strategy. What you need to do is put in some of your own work, do some back testing, do some evaluation, get some metrics, and then only then will you avoid falling into that cycle of doom. But please do let me know how you get on. Leave me a comment below. I try to get back to as many as I can. Now, as I promised at the beginning, these setups are quite simple, but of course there are multiple different currency pairs to monitor, multiple different time periods that you could be looking at. So what I've done, I basically had one of my guys here at ForexSignals code up a simple trading tool which does all the hard work for me. It basically monitors the markets looking for these simple price patterns and will alert you indeed when it finds one. Now, to get your hands on this trading tool, absolutely free of charge, all you need to do now is register for a 7-day free trial here at ForexSignals.com. You can also then join me for the week, watching me live trade these patterns on our live streams, which we do around the clock 5 days a week. Don't forget now to subscribe to the channel if you don't already do so, and of course if you hit that bell notification you'll be notified the moment my next video has been released, which is just around the corner. I hope to see you in the trading room real soon. Until then, happy trading and good luck.